those are, um, well, that'll be interesting if that happens.
Those are nightmare times. You definitely don't want to remember those days.
Hey, thanks everyone for joining us today. We'll get going in just probably right at about the top of the hour in a minute or so. We were talking about interest rates.
Fun
Um,
topic.
it's like, and we just had an eye-opening discovery, not necessarily the greatest one. Oh,
The funny part is someone asked me at the IMB in January or February, I forget when the IMB was. It seems like so long ago, and that was just a
it
short time.
was.
Yeah,
We were
they
in
were like,
Nashville, right?
no, IMB was in New Orleans. I
Oh,
sent
it
you
was
a
in
picture. It
New
was in New Orleans.
Orleans. That's right, it was. I
And
don't know why I'm thinking Nashville.
yeah, we were guessing the 10-year at the end of the year, and I turned in a 386 number. And boy, I'd love to have that number.
Yeah, can I get it back? We've
never
started
thought never
tracking.
thought we should have gone the other way and said, oh, 525.
We have started as a team here tracking predictions for our conferences, and they've started to be documented. And it's interesting how certain people always land in a certain range. I'm always the more optimistic view. Although some people wouldn't necessarily, I'm the crazy view, compared to some others on our team who are probably more spot on with what numbers look like. So, yeah. All right. Well, I think we'll get going here. Hi. Thanks everybody for joining us today. This is Faith Howard Mooney. I have a new title this week, and I'm so proud of it because I love my TMC family. So I am the SVP of Member Engagement here at the Mortgage Collaborative, and feel very, very lucky to be here. And with me, one of my favorite people in our network who kind of you took a hiatus and you were gone for a little while,
I was.
and we all missed you. And you're now back in a role where you're engaging with us again, and we're so happy with us. So, Scott Alexander, who is the Chief Risk Officer, we talked about before the show started, big title at Assurance Financial out of Baton Rouge, Louisiana. So, thanks for joining me today, Scott.
Oh, I appreciate it. And congrats on your new title and promotion. Well
Thank
deserved. And look
you.
forward to working with you in that new role.
Yeah, thank you so much. It involves me being more engaged in our event planning and things like that.
That
So,
is exciting.
I am excited about that. We all know that we have the greatest team here and we all love serving people. And so I was sharing with Scott before the call started today that I'm normally not a title person. It normally just doesn't, you could call me just about anything and I would still do what I was going to do. But this one means a little bit more just because I love it so much here and I love the team that we have and the family of lender members and partners that we have that we work with. So,
Well, again,
uh,
again, well deserved, and congrats. And we look forward to working with you and you guys. And we
thank
appreciate
you.
everything you do.
Yeah, so you just recently underwent kind of a change in your title and your responsibilities there at Assurance Financial. So just you want to share a little bit
Yeah, I
about
don't
Assurance
mind. So
and
I was
yeah.
director of operations and dealt with everything operationally. And then at the end of 2022, was given an opportunity within the company to go back into sales, which is where I cut my teeth before getting into ops. I was a loan officer branch manager and said, why not give it a whirl? I was able to manage our largest retail office for 1 year, pick the greatest year of all years to go back into sales.
Good for
um,
you.
as our owner and I joke about, I set records that may not ever be beat again.
Good for you. It's always nice when that happens, huh?
Yeah, it was fun. It was a fun year though. I spent all of 23 doing that, the back half of 22, and then 23 doing that. And then we needed to make a little bit of a change here, structurally operational, and kind of created a position we didn't have before. That being chief risk officer, and it kind of fit what I did. I'm an architect, I guess, by nature, and I enjoy building and working on things. So, as you said, a title's never encompassing of everything you do. So now I've got compliance, post close, pre close, all that stuff, underwriting, credit policy, pricing, all those structures are now falling under me. So it was an opportunity I couldn't pass up. So I'm back on the operations side and enjoying it.
Yeah, fantastic. And share with us a little bit about who Assurance Financial is and kind of
Yeah.
like what makes you special.
So we are an IMB, strictly retail. We operate kind of in that southeast footprint. If you think of the Southeastern Conference in football, that's kind of our footprint area. We've got 22 retail offices, over 150 employees, and we've been around for going to be 23 years this year.
Good for you.
Owned by two individuals. One works here in Baton Rouge with me. The other one is Lafayette, and two original owners, and they enjoy what they're doing. One is more hands-on than the other, but they kind of let us do our thing, and we've been really good at it. And we like to think we are. We've been around for a long time and continue, as we say, 20 more years.
Yep. And business for you has been decent.
It has. We're actually we've had some, I should call it attrition for some loan officers. So if you look at our Q1 over Q1 from 22 or 23 to 24, and you factor out that attrition, we're actually the ones that are left with us are actually doing better this year than they did last. So we're excited to see that. Month over month, we expect to be up this month compared to last month, and up April over April, which is a good thing. So
Yeah,
hopefully headed in the right direction.
yeah, I think a lot of people are. We've been hearing just little inklings here and there from within our membership that things are not what they were. I don't think anybody expects them to be, maybe ever. But things seem a little bit more hopeful,
Yeah.
um, hopeful right now. So I think that is always good. Still a lot of merger and acquisition activity going on, more in the news every day, it seems like.
I
Um,
think the year will continue to show that. I think if you didn't 6 months ago say, "Hey, long term, let's treat it like we're going to be in what we are for the last 6 months for the next 18 months, and staff accordingly, adjust accordingly," you're probably looking to merge or acquire someone, and to do that to get by.
yeah, we definitely have heard and seen some of those things happen. So, big market that is out there, if housing can be found as first-time home buyers in the industry. So, this last week I pulled a couple of different surveys who both went at things uh, from a slightly different angle, but Realtor.com did a survey out there for first-time home buyers and trying to find out the top 10 cities for first-time home buyers. Realtor.com did a similar thing. Their criteria, however, was a little bit different. So Zillow called that first-time home buyer, the home buying age for them was 29 to 42, um, which I realize it's ratcheted up a little bit, but for me, that was kind of, it's like 42, really 29 to 42. It seemed like a little older than what I thought
Mhm.
someone would call that age range. Realtor.com called it 25 to 34. That seemed like a little bit more in line of what I would typically think of, but we realize that it's not typical times out there right now as well. And so they measured all kinds of things like, how people can save for a down payment more quickly, higher density of young homeowners in an area, higher success rate for first time home buyers in actually finding and getting a home. A lot of those things. Now, the Zillow survey focused on large urban areas versus suburbia, which I think makes it look totally different. Super surprised for our St. Louis peeps. I see two of them on with us right now. St. Louis ended up being the most affordable city from Zillow, with Detroit and Minneapolis following right after that, which is curious to me because I think Minneapolis for a Midwestern city is pretty expensive. But if you're focusing only on the urban area, we've had some challenges in our urban area, which I imagine a lot of people have that have caused people to move out of that area. So you might find more homes available.
You
Anybody
probably
on this list that kind of surprised you? You did not land New Orleans or Baton
no.
Rouge did not land on either one of these
No,
lists.
there's flight out of New Orleans, unfortunately, right now, but there are a lot of homes in there that are attractive. The Minneapolis, Detroit is very interesting. And I guess if you're looking first time home buyer within that pockets, and you're more familiar with Minneapolis than I am, you probably have a price point or some property within that price point that that first time home buyer can afford. I know in my area and probably a lot of areas around the country, when you factor in price point, you factor in the rates where they're at, and then you factor in insurance, which is the big wild card now. It's where can that first home buyer find something that's affordable when you factor all those three things in. I know with us, it used to be the insurance was a foregone conclusion. You just at the end of it said, okay, who's your insurance with? Go ahead and slap that lost pay clause on it and send me a policy. Now we're actually seeing this, especially on the Gulf Coast area. The real estate agents are shopping for insurance companies before the borrowers even shown houses because they're dealing with such excessive premiums that's become a big part of the transaction now that's trying to be mitigated on the front end to find, okay, first, can I get insurance? And then second, can I afford the insurance before we even go start looking for a house?
So how have you combated? I'm kind of curious about that. A little bit off track, but we're going to go where the conversation goes today. So, um, how have you combated that with you had a sales team until very recently? I mean, have they started then to have to change their process and use that calculation when they're pre-qualifying somebody? How have you,
They,
how has insurance
they
assurance dealt with
did.
that?
Basically, we went from probably having one or two referral partners that we'd refer clients to get a quote to we would have 6 or 7 on the front end. We're just trying to say, okay, give me an idea of what this is going to be in this area for the borrower. And then you use that as kind of a starting point to say, okay, here's where we're at. Stay in this price range and we should be okay. And then stay in this area. And it's really got it challenging, especially. I don't know how familiar you are with Louisiana, and this is specific to me. Obviously, I don't mean to go there because I want to keep it where it's general. But it used to be, if you look at Louisiana, I-10 kind of cuts the state into north and
Hmm.
south. It runs from Slidell to Lake Charles across. And we used to say if you were south of I-10, you'd have problems getting insurance because you're close to the coast. That bar has now moved up north of Alexandria. So anything south of that, it's now like, okay, we've got to go find insurance on the front end and not on the back end of a deal. So it changed how we went about originating, where getting the insurance or getting the insurance quote was being done on the front end before if I was even getting to where, okay, I've got you pre-qualified
Yeah, it used to be that you just showed up with your insurance
now.
at your closing, right? I mean, it was just one of those things that you had to do, and you needed to remind yourself that you needed to bring it to closing with you. And now it's like, it's almost like you probably have to get that in order to get a clear to close, right?
It was such a yeah it was such a just afterthought. It really was. It's like, okay, just you need insurance, go find your insurance now.
Yeah.
Last year we started doing it last year. We've got another one in May. We went around, we were having realtor panels with insurance agents. So we were hosting, and we're still doing it. We were hosting insurance panels with insurance agents. We actually brought a commissioner insurance into a couple of them, where we're basically just educating the realtors out there on the ongoing challenges with insurance that we're having in the state. And it's a big talking point here where there's certain, I guess, reform that needs to be done to get us where it's a more competitive environment to have more folks writing insurance to at least drive the premium down, son. And the biggest piece that I learned is on the secondary side that although you may stay as a state free from, let's say, natural disasters, what happens in California, what happens in Massachusetts, that all factors into that reassuring on the backside. So it affects everyone, even if it's not in your state. So if there are wildfires or floods raging in California, that's going to affect us. And we need to realize that. So it's almost globally like you need to be, okay, we need to have nothing go on so these insurance and reinsuring can settle down some and give us some reasonable prices.
Yeah, I think everybody across the entire United States has seen their insurance go up. I guess if you're losing it in some places, you have to make up for it in others would kind of be the thought process there. But it is interesting to hear, how dramatically something like that we would have never thought of before
No,
can really change in the process you have. Um, as far as first time home buyers, realtor.com looked at things a little bit differently. They looked at it from the perspective of only one city in a metro area. And realtor.com was the one that looked at 25 to 34-year olds versus other households. Um, I'm I'm probably gonna butcher the name of the town. It's near Buffalo. It's Irondequoit, New York, was the place that ended up on the top of the list. It looks like it's outside of Buffalo. anybody in New York, share with me if I'm like totally off base. I had never heard of the town before. Benton, Arkansas, two places in Iowa, Winterset, Iowa, and Council Bluffs, Iowa. So, um, kind of interesting that the list looked quite dramatically different, even from the states that the places were in. And then there was Newingtown, Connecticut, which I think everybody, when they think about Connecticut, they think about Stanford and places close to New York
Mhm.
City, but Connecticut is really a very rural, blue collar type of state. And so, Newington, Connecticut, anybody's in that area, it's the fourth, fourth from the top of most affordable for first time home buyers in the United States, according to Realtor.com. So, thought that was kind of interesting. The other thing that came up as I was looking into these articles and other things is the most attractive market for real estate investments. And I was super surprised by what it was. Dallas Fort Worth. Now, they did not define Dallas Fort Worth, and I see Tony Bramley on here, who's from that area, um, but they didn't define what that is. And so, is Dallas Fort Worth really just Dallas and Fort Worth, or is it the whole, expansive now area of that particular market? And I would have to think it's probably the more expansive area of that market.
A lot of property and a lot of bars, you would think, in that area for sure.
Yeah, yeah. So that was that. Came up with a new term. I always like looking at a new term or an acronym or something that I don't know for the year. So I came across one that I knew what it was, but I didn't ever equate it to housing. So has anybody on here heard of it, shrinkflation?
That's a
It's
new
not
one
a
on me too.
Yeah, became a word. Actually became a word along with side hustle in 2022. So it's like a
Side hustle
couple.
in 2022 was a big deal.
Yeah. Well, apparently shrinkflation was as well. And what the term originally meant, Tony,
100-mile
uh,
radius.
100-mile radius of Dallas Fort Worth. That
And 3.5 hours to get from one side to the other, I'm sure, Tony.
that's probably what they were looking at, Tony. That's what I'm thinking anyway, which made it the most attractive market for real estate
More
investment.
traffic.
Yeah. But shrinkflation was when companies, and a lot of it happened here in the Twin Cities, because I remember when it happened, we have a lot of food companies that are based here. General Mills is here.
Mhm.
General Mills merged with Pillsbury, which was here. It's when they started making smaller quantities for the same price. So the
Yeah.
outside of the package might have looked the same. The inside of the package may have included 4 or 5 ounces less of something than what you normally got. So that's where it originally came from. So it's essentially fooling people by selling, a box of cereal or something like that that looks the same, but it's definitely of a smaller size. And
I see Sarah put the Girl Scout cookies in there, and she's 100% correct on that. It's the same box, but it is not the same quantity on the inside as it was 5 or 6 years ago. So it's interesting. I'll have to use that word in the future, but it's shrinkflation.
shrinkflation. So another place that was brought up. So that was how this article started talking about how Americans' appetites for things that are big has started to change. So big cars and big houses were the two that they talked about. I don't think anybody would be surprised that people are shrinking their houses just because
Mhm.
of the aging population. I know we were talking about that this morning when we chatted for a few minutes. That I think people are wanting to shrink the size of their house, but share the experience that you had shared with me about trying to do just
Yeah,
that.
so I'm at the age now where my wife and I look to downsize. Probably within the last 12 months, we started contemplating, okay, do we sell our home now and move into something much smaller than we have now? And that word would have been perfect. What we were seeing out there is like, okay, I'm going to decrease 1,000 or 12, 1,400 in square foot, but yet my price point is going up by $300,000 or $400,000. So it's like, okay, that doesn't make sense. We'll just stay in the bigger house.
Yeah.
And I think that's part of the issue with the first time home buyer is that 1,500 to 2,100 square foot house it costs what it used to cost for a 3,600 square foot house. So that's the problem we're seeing in the housing market when you can find the supply, because
Right.
finding the supply is the other issue.
Yeah. I actually saw some real estate signs up in as I was driving around this past weekend. One of them I saw on I think it was a Thursday. It was either a Thursday or Friday. It was down by Monday. They had, I don't know how many people in and out. It was just a couple blocks away from where I live. And it was sold. I mean, it had to have been sold in less than 24 hours.
I think
Um,
on the homes that are in I don't want to use the word the prime homes, but the homes that people are looking for, they've kind of got used to the rate, and the rate's not so much the bugaboo now. It's finding the home, and the supplies become the issue. So it's really a challenge. Everyone's saying, hey, we need rates to drop, but the problem when rates drop, prices are going to rise. So it's hey, buy that home now, and then usually always you marry the home and date the rate. And I think that's what you look at is marry that home now if that's what you love, and then look to refi in the future if and when rates do drop.
yeah. I think it is part of that too. I think part of it though is with the cost of homes having gone so high. In my wildest dreams, I've always been very conservative related to finances and things. I never thought about the challenge of qualifying. And
Mm-hmm.
yet, when I moved this last time, because of interest rates having gone up and because of lack of affordable housing, and I'm in a neighborhood I love, we had talked about this earlier, but
Yeah.
in a neighborhood that I absolutely love, but did not imagine at this time in my life I would be buying a home that costs as much as it does. And then it was like, I barely qualified. Thank God I have perfect credit because that was the saving grace. But I think a lot of people, because of the high cost of housing too, you're having not even just first time home buyers are having a harder time qualifying when they want to
We
do
see a lot
something.
more, yeah, we see a lot more of the debt ratio pushing the 44 to 50 on conventional and the 45 to 57 on FHA and on VA up to 60. And when you look at the profile bar, you're like, this bar really shouldn't have a problem qualifying. It's just you factor in a decent size 350 $400,000 house at a 95 or 100% LTV. You factor in the rate on what that is, you factor in insurance policy, and if they've got a couple of car notes and just say a little bit of miscellaneous debt, you're pushing that envelope because of it. And it's unfortunate that is the case, but it's the world we live in, where a lot of folks are in that same dilemma, I guess you would say, and it's causing some folks to sit out for a little while too, because they
Yeah.
don't want to stretch that budget.
Right. Well, and we all know if you ever go to the grocery store, I mean, the grocery store has become a relatively stressful place these days. It's like, I never thought in a million years I would pay $6 for a box of cereal for my kid. It's like, are you kidding me? So yeah, so there's that too, that I think people are analyzing, their household expenses. Literally everything has gone up. And then to stretch yourself in that environment, not knowing what's going to happen with those household goods, or kids' needs or those types of things. I think, some of that is happening too. One of the things that I saw this week, and I'm going to give a shout out to Rob Chrisman for a couple of reasons. Number one, the next two things that we'll talk about were things that were in that I read in his blog that I thought we should probably talk about those. The other thing is I'm working from the airport today, and kudos for him for making it look so easy because it's not as easy as he makes it as he makes it look. So,
Yeah.
um,
Sometimes I wish I was Robin traveled as much as him because his email will always start off, I'm traveling here today. And I'm like, is he ever in one place for more than 3 days?
no, I don't think so. I think he should have his show should be Where in the World is Rob Chrisman? I
Find
think.
Rob.
Yeah, find Rob. But yeah, but in his Saturday blog, he mentioned a study that was done by Clever Real Estate on the true cost of home ownership. And I was just amazed by the like responses and percentages. In the survey, 67% of homeowners have regrets about their home purchase. I mean, that just seems like an unusually high amount. I mean, usually buying a house is, I mean, it's kind of notoriously been known as a happy time, and you're into something new, or a new neighborhood, or a new school for your kids, or whatever it is, that 67%.
And that's
um,
almost 7 out of 10 homeowners that regret that transaction. That was fascinating. I read the same blurb in the email, and I was kind of taken aback too. I was like, that's a lot of people that are unhappy with such a big financial decision and really life-changing decision in some cases.
Right. And then, I mean, and an expensive one in most cases. I mean, and then if you added in the people that bought a fixer upper, which I read a different article just this morning that said that fixer uppers are becoming a little bit more available because of so many people that used to flip having
Mhm.
exited. That's not the easiest thing to do anymore as it has been in the past. And so starting to exit that, are leaving a few more of those on the market. But if you include the fixer uppers in that, 82%, 82% regret. Now, the fixer upper part of it for me, that totally makes sense
Yeah,
because,
and we see that on the renovations. We do a small amount of 2 or 3 Ks in home style renovations, and we'll see that feedback during that process where you'll get a client that'll say, I regret doing this. It's too much. It is a lot of work that goes into that. And especially if you're just flipping it for a profit, there's sometimes you'll run across the money foreseen expenses where you can't turn it for the profit that you were looking to make. But even in the case where they're buying as a primary, you'll see they'll get into that and it's like, oh, well, I made a mistake here. I should have just looked for something that was complete. But with the inventory restrictions, that fixer upper has become an option or a need for some people. It's the only option they have.
absolutely. Well, and sometimes I think the most stressful part of that is if you're doing it, it's your primary residence, you're probably living in it
Mm-hmm.
at the same time that you're doing it. So you're living with that, which is, I think a lot of people, that makes it a very stressful situation. 23% say it's negatively impacted their mental health. 21% say owning a house is not worth the cost, and 25% say that home ownership hasn't been worth the hassle. I was just wondering, as I read this and knowing that you were, that you were going to be on and had come off of managing a group of salespeople. I mean, are these things that then, that you now know there's a certain percentage of people out there that have regrets? Are these things worked into the sales process of when people are buying? Like explaining to them. I mean, first time home buyers, I think sometimes they go through programs that explain, you're going to need a lawnmower and you're
Mm-hmm.
going to need, all of these other things. But is that something that LOs would normally talk with their
I
homeowners
don't think
about?
they do. At least I can say RLOs is more about the transaction itself and putting them in the right product that they can afford.
That,
And I don't know if enough counseling is giving on, okay, you've closed that home. Now what happens after that? I think that's the piece that
right.
I don't know of any company that does that. If there's somebody out there that does do that, then kudos to them. But that's the piece that the folks are probably missing is like, okay, once you get to the transaction is complete, we kind of disconnect other than the marketing that goes out. It's just, is the bar prepared for what happens after that
Right.
happens?
Right. And I would think that more of that would maybe traditionally land with a real estate agent, in helping people kind of understand the process, but maybe it doesn't happen there either. I know I've got kids that own a house, and before they bought the first one, I remember having all of those conversations. Okay, you need to think about all of these things
Yeah, I
before.
remember my first home too, back in the day, and my parents and my in-laws were the same way. It's like, okay, you're gonna need money to do this, and this. And I kind of coached my son the same way when he made his first home purchase last year, the same way. But then I was like, okay, be prepared. There's a lot of uncertainty going to come up too. You're going to be 2 months in, and something's going to break, and you have to spend some money on that. So I don't know if enough of that coaching goes on that you need to expect the uncertainty that's there because it will happen. It's what was the show Money Pit? I think it was with Tom Hanks. They bought the house and they just were sinking money into it. It was problem after problem. A problem comes up. Unfortunately, that does happen. But at the end of the day, it is your home and it is a major part of your life.
Yeah. Yeah, and I think people have their homes are more of a major part of their life. I think a lot of people figured out during COVID that your homes are really important places. And I think people value their homes and their home living environment more than maybe what they have in the past and who they bring into their homes and all of those kinds of things. I do
Well,
think,
this would be interesting for someone, and I'm sure a study will be done at some point in time. But prior to COVID, and I know this data is out there, what was the average time that a home was kept before they were even moved or relocating? That took place a lot more frequent than what it is now.
right.
Now that we're in this environment, what is that stretched out to? And is that part of the issue with the negative data that's coming back? Those people in a normal environment, and you hate to use the word normal, but where we were, those
Yeah.
folks would have already moved on to house two, and they're not in house one, and perhaps they're stuck in house one because they can't get to house two.
Valid point, I think. Yeah, they can't get to house two, so they're still stuck in house one. And who knows? I mean, you normally think traditionally, if you're thinking very traditionally, you probably bought your first house not thinking that you would be in it when you would
No.
also be expanding your family. I mean, a lot of us did that, at least back in the day, where it's like you buy your first home and it's not a home necessarily that you plan on having two or three kids in it with you. And now people are finding themselves, kind of stretched in a smaller size house, maybe with more people in it. Maybe a kid has moved back in, maybe a parent has moved in. I think some of those things culturally happening as well, kind of may make a difference on impressions. Surely there are people out there that work in that first time home type
Yeah.
buyer space that are very comfortable with counseling people about, what they need and trying to prep them. But there's still always some um, unexpected, I guess I would say. There's always some unexpected things that happen after you get into a house, no matter how much prep that you do.
Agree. And I'm just thinking back to those numbers you gave at 27. I was I was on my third home at 27 because we bought our first one, which is a small starter home. And then we had a relocation. So we had to move and relocate. And then the third one's another relocation. And we actually decided new construction built at that point. So it's wild that that's first time home buyer at that point. And back in the day, I mean, this is the early 90s. I was on house number 3 at that point in time. So
Yeah.
times have changed, and we as an industry need to realize that, and probably market different, or definitely market different, but definitely realize those demographics are changing for us too. We need to make sure we're marketing to the right people.
Well, marketing to the right people. And I think that people's ideas about their first house also are maybe a little bit different. I mean, it's like I think with a lot of people that are young people that are renting, they're very accustomed to having some very, very nice amenities. And the expectation then is that those are also in their first house, and the reality of the market is different than what the expectation may be right now
That
for
is
them.
that is a very true statement. I'm just thinking to my son, and he was like, "Okay, I need 3 bedrooms, 3 baths." I was like, "Wait a minute, it's your first home. What do you need 3 bedrooms or 3 baths for?" It's like, "Well, that's normal." No, I was like, no, you need 1 bedroom, maybe two, and you really only need one bath. You need to change, but you're right. That's what they're used to because they live in a apartment
Yeah,
complex or something that has those amenities, and that's what they're used to, and they just think, well,
yeah,
that's the norm.
yeah. Yeah, it all depends on, how you grow up. And I think too, if you think about it, if some of the first time home buyers that are buying that are in that age range, maybe they're the first person in their family that
Very
has
good point.
purchased a home. And so they don't have somebody maybe like what has happened in the past, coaching them through or helping them through that situation. They may be the first person doing it in the first generation of people that are purchasing in their
It brings me
family.
back. Yeah, it brings me back to 2019, and I remember this vividly. It was when we switched. It might have been end of 2018. We went to hybrid closing, where we were doing digital and getting the docs out 3 days prior to for client to be able to review, sign at their convenience, and then just execute the wet on the back end. And we made a loan to it. It was a first time home buyer, and mom and dad came to the closing with them, and I happened I knew the closer, or not the closer, the attorney. The attorney called me after and said, "Hey, I wanted to call you on this customer because the mom and dad were thanking us because the documents went out and they were able to review them and go over everything in detail with their daughter so that she understood the transaction and the enormity of the transaction that was taking place. And I think you're right, is you may not, all folks may not be able to take advantage of that or have someone doing that mentoring. And I think that is important in our world. We need someone to be mentors and have that in mind when we're talking this transaction as to the enormity it was, and don't always think get loan closed, make sure client is satisfied. I think that's the key piece.
Right, right. And get the survey results turning in a little bit different direction about how it made me kind of sad to think that that many people regretted their decision
Yeah, that is a large number.
about
You
where
hate to
they're
see that.
leaving.
You hate to see that.
Yeah. We're out of time.
Oh, wow.
It goes by so fast
It
when you're just
was.
having a nice conversation with a friend. I appreciate you. This has been a lot of fun today. Thanks everybody for joining us. Come back next Tuesday at the same time to join us. You can also find us on YouTube. Please subscribe there if you want to pick up things after and listen to them as a podcast. And if any of you are going to be in Memphis the next couple of days, that is why I'm in the airport. So make sure and get a hold of me while you're there if I already haven't gotten a hold of you. Thanks again, Scott. Appreciate you. So have you back engaging with us again. It makes all of us here at TMC very happy.
Well, I appreciate it. You have a safe trip and enjoy Memphis. Get some barbecue. There's plenty of it down there.
I'm planning on it. Thanks so much. Everybody have a great week.
Thanks. Thank you.